Good morning and welcome to the Forex Market Wrap brought to you by Pepperstone. It's Friday the 18th of August 2017 and I'm Darren Sinden. Let's take a look at overnight changes, price moves we need to be aware of. A relatively quiet day yesterday. What action there was is focused on the bottom half of our table in things like Euro Yen, Euro Swissy, Sterling Yen and Australian Dollar Yen. Now we looked at the Aussie dollar versus the yen yesterday, didn't we? And asked the question, could the Australian dollar make further gains? And we got an emphatic answer as far as the yen was concerned. The answer was no. Look, a big red bearish engulfing candle, rejecting the move higher, completely engulfing the prior day's move. The suggestion or inference here being that we might now test back towards 86 and even perhaps back towards this recent low. Let's see if that transpires. The pair surprised, or the cross surprised us yesterday. Perhaps it can do so again. What's on the calendar then? Events that may move the market. A fairly busy calendar today. No high impact events in fact, but I have chosen to focus on the medium impact events on the day, starting with German producer price index data for July out at 7 o'clock London time. And then the focus moves to North America at lunchtime, 12:30 GMT, CPI data from Canada. Of course, this will be key to trying to get a read on what the Bank of Canada's next move will be around interest rates. They're forecast perhaps to rise again in October. We shall see. And those central bankers just can't leave us alone. At 14:15 GMT, FOMC member Kaplan will be speaking in the US, so that'll be worth paying attention to. And then to finish the trading day and the week for many of us, at 5 o'clock GMT, we have the highly influential Baker Hughes US oil rig count, and of course oil prices feed directly in to fears about inflation, or expectations about inflation I should say. Okay, breaking news and comment that's caught my eye. First of all then, Malaysian GDP grew at an impressive 5.8% in the second quarter of 2017 versus 5.6% in Q1 and forecasts of 5.4%. But against that, foreign direct investment into the country fell by more than 50% over the same period. Staying in Asia, Chinese house price growth slipped to an 11-month low as both purchasing and new investment softened. Being China though, it wasn't as bad as it might sound. Prices were up by just 9.7%. US equities posted a sharp retreat as Republicans distance themselves further from Donald Trump and markets begin to doubt that his political agenda can be delivered. And sadly, the Barcelona terror attack leaves 13 dead and many injured. The Spanish police kill 5 suspects foiling a second attack, says MarketWatch.com. Food for thought then, something to take away with you into the trading day. And I'd like you to think about this, if you will. As markets come to see President Trump as isolated from his own party, we should perhaps ask, is he a threat to market stability in the USA? The chart opposite shows that US small cap stocks have been voting with their feet since mid-July, and the question I'd like to posit really is, could large cap stocks now play catch up? Here we can see the S&P 500 index in green and the Russell 2000 index, the big small cap benchmark in the States, in blue, and you can clearly see a big divergence between those two. Thank you for your time today. Please take a moment to read the risk warning and disclaimer. Trading CFDs and FX on margin can be a risky business. If you're unsure about any of the risks involved, then please do contact your Pepperstone account executive.